How's it going, everybody? And welcome back to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going over our number one buy and number one sell setup of the day. Before we get into that, of course, we're going to take a look at two different things really quickly. First being COT data, then followed by retail sentiment. So let's go ahead and just get right into it. So COT data right now, same three pairs still on the short side when it comes to institutional traders' net positioning. We have the Swiss franc, the Canadian dollar, and the Japanese yen, with the Swiss franc being the most short out of all of them right now at 90.6% short. Same three in the long side as well. We have silver, oil, and gold, so a lot of commodities, with gold being the most long out of all of them at 86.26%. The pound is the most long currency, followed closely by the New Zealand dollar and the US dollar. US dollar right now sitting at 68.02% long. So there you go. Quick look at all of the long and short positionings here. We're going to take a look at latest weekly COT filing. This is the report that compares last COT report to the most recent COT report and looks for changes in overall long and short contract positioning. So right now the Australian dollar is the most long, has the biggest long change from all of these assets. We see 21,046 long contracts opened from last week to this week on the Australian dollar, just 2,797 short contracts. So way more long contracts than there were short contracts. Overall, a 5.23% net change differential. However, we are still pretty 50-50 when it comes to overall sentiment. So it's not like institutional traders are heavily favored on the long side right now, but they are they're definitely moving in that direction, adding all of these long contracts compared to this many short contracts. So we'll have to wait and see if this trend continues going into next week. But that's basically how you read this chart here. I'll let you pause the video if you want to look further into that, but I'm going to go ahead and move on into retail positioning. We'll start with our major currency pairs only, and USD Swiss franc and NZD USD are both favored up over 60% in terms of retail positioning or day trader positioning. That is a bearish indicator for us. Pound dollar, euro dollar, and USD CAD are all three favored over 60% on the short side right now from day traders, and that is a bullish indicator for us. We do this inversely because, unfortunately, more often than not, day traders, the overall crowd, whatever the overall crowd is trading, typically gets it wrong. So we do look at this in terms of like a contrarian or opposite signal. Opposite of whatever the crowd is doing is how we score this here. So all of these pairs here are favored on the long side by day traders. Those are bearish indicators. And these are the opposite. These are the pairs that are favored on the short side right now by day traders, and these are bullish indicators. Moving right along, we'll check out metals, indices, crypto, and commodities. I'll remove minor currency pairs. And there we go. So all of these here, big old list of stuff here, these are all favored on the long side right now by day traders. And these three down here, the DAX, the S&P, and the Dow, are favored short right now by day traders. So there we go. There's a look at COT data and retail positioning under our sentiment category. Let's go back on into top setups. I'm going to remove all the neutral biases. And we have a pretty big list of bullish setups today. We've got like 10 or 15 bullish setups, and then just 5 bearish setups. One very bearish setup, so we're definitely going to look at CAD JPY, and then we have 2 very bullish biases that are tied at +10. It's Aussie CAD and Aussie NZD. Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today. I suppose because we're already looking at the Canadian dollar with CAD JPY, we'll just get a whole, clean slate here. We'll take a look at Aussie NZD instead. In fact, why don't we go ahead and start with Aussie NZD. I'm going to go into Data Scanner, Forex, and Aussie NZD right here at the top. Very bullish bias, score of +10, COT data a score of +2, and retail sentiment a score of +1. So taking a look at our market sentiment section right here, right now, we just talked about the Australian dollar. It had the biggest positive weekly change, but it's still basically sitting at 50-50. COT doesn't really have a preference one way or the other. However, when it comes to the New Zealand dollar, they are clearly favored on the long side, 72.55% long compared to 27.45% short. However, their weekly change was negative, so that's interesting, something to keep an eye out for. Day traders are heavily short Aussie NZD right now. 93% of open day trading positions are short positions right now on Aussie NZD. Seasonality is a score of +1. We can see right here that historically speaking, over the last 10 years, the month of July all averaged together over the last 10 years, we see historically that Aussie NZD does in fact trade higher during the month of July. Our trend reading right now is a score of +2, and to get a better idea of what the actual daily chart of Aussie NZD looks like, we're going to pull it up right here. I'm going to search AUD NZD. There it is. And there we go. So that's what the daily price chart of Aussie NZD looks like. And we can see that pretty much the entire month, slowly but surely, this thing has been heading higher. A little bit of a pullback or correction here from July 16th to yesterday. But from yesterday to today, we do see it back on the rise, and price forecast predicts that that is going to continue to be the case. We'll finish up with our fundamental data. GDP growth is our one lone red box here with a score of -2. Manufacturing PMI, retail sales, and interest rates, all scores of 0. Services PMI and unemployment rate, score of +1. Inflation and employment change, score of +2. Now, what we're taking a look at here with this chart, in case you've never seen this before, is we're trying to keep it really simple and quick and easy to look at inside the scanner page. If you want actual GDP data or PMI data or retail data, we have all of that here in our fundamental section. We have pages and pages and pages of logged data for all of these different countries, all of these different currencies, sometimes dating back many years. So you can take a look and get very in depth in all of those pages here. But in the quick scanner pages, we're trying to keep it nice and simple. Did it miss, did it beat, or did it meet the forecasted number? So for example, GDPA would be the Australian dollar because it is listed first. It missed its GDP forecast in its most recent GDP report. Whereas the New Zealand dollar, currency B here, because it is listed second, beat the GDP forecast in its most recent GDP report. So the Australian dollar missed, that's not good. The New Zealand dollar beat, that is good for New Zealand. That is why we have a -2 score. Here, manufacturing PMI, we can see both Australia and New Zealand missed on their manufacturing PMI, so that kind of cancels out. It's a 0 score here. Services PMI was a beat for Australia and a miss for NZD. Retail sales are both beats for Australia and New Zealand. The CPI forecasted for Australia was 3.4%. It came out at 3.6. The forecasted CPI for New Zealand was 4.7. It came out at 4. And we can see the employment change was a slight miss here for Australia, a pretty big miss here for New Zealand, and the unemployment rate ticked higher, forecasted at 4% for both countries, but actually moved higher in both countries as well, up 0.1% in Australia and 0.3% in New Zealand. So there we go. There is all the data and numbers and information backing up that +10 very bullish bias on Aussie NZD. The other pair that we said we're going to take a look at, we scroll all the way to the bottom, we have CAD JPY with a score of -10. So very bearish bias. Like I just said, score of -10. COT data is actually a neutral score, and retail sentiment a score of -1. So back over here, taking a look at market sentiment, we can see that both of these are favored heavily short from institutional traders, but also both had positive weekly changes. So looks very similar for both the Canadian dollar and the Japanese yen in terms of COT data sentiment. That is why it's getting a 0 or neutral score. Retail sales, however, retail positioning, 75% of open retail trades right now on CAD yen are long trades. That is giving us a bearish bias. The trend reading is a score of -1 for CAD yen. And so let's take a look at the daily chart really quickly. Let's see, I might as well just search it. CAD JPY. This thing has been tanking as of recently. We see earlier in the month just kind of range bound, bouncing up and down, not a whole lot of direction here, but recently, ever since July 11th, this thing has really just started to drop off. A big move from 2 days ago to yesterday to today. However, it has it's gotten back a little bit of what it's lost, but price forecast predicts that it is going to continue to move downward. We'll finish up with our fundamental data here. Right now, we see GDP, unemployment rate, and interest rate with scores of -1. The manufacturing PMI and services PMI and inflation, 0 or neutral scores. And retail sales and employment change are both scores of -2. So taking a look over here, we see Canada missed on GDP, where Japan met the GDP number, not beat it, but just met it. Missed on all the PMI numbers here. And retail, we see Canada missed and Japan beat retail. CPI numbers forecasted at 2.6 for Canada, but came out at 2.9. Forecasted at 2.5 for Japan, but came out at 2.8. Employment change, we see a miss for the Canadian employment change. It was forecasted at 0.13. It came out at -0.01, whereas Japan actually beat, forecasted to come out at 0, but came out at 0.15 instead. The unemployment rate in Canada ticked higher off of this employment change. We saw it go from 6.2 to 6.4. And the employment rate in Japan stayed the same. It was forecasted at 2.6 and it came out at 2.6. So there we go. There is all the data numbers and information backing up that very bearish bias -10 score on CAD JPY. Hope you guys enjoyed the video. If you want the Edge Finder for yourself, you can find it on our website, a1trading.com, or you can find it down in the links in the description below. And you can get a discount on the Edge Finder when you use promo code A1YT at checkout. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.